Okay, so trading plan weaknesses that we know we are not good at. But chances are, dog, everybody knows what they need to change in order to get to where they want to. Yeah, but it is in people, whether people believe that they actually deserve and are actually capable and believe in themselves enough to actually like believe that they can turn those weaknesses into strength. Yeah, so into ezokusiza ngaloko is something that you can measure so that you can have the progress. Yeah, so a training plan will be our measurable matrix. Yeah, we will measure how good we are doing based on how well we following our training plan. Yeah, because at the end of the day, that is all it is. You follow, you stick to your plan, you'll be fine. Yeah, so training plan weaknesses on the charts. 10 weaknesses on the charts. Then 2, 10 strengths. Yeah, so our strengths and our weaknesses, they could be anything. Yeah, they could be in terms of actual chart work. It could be maybe you're impatient. It could be maybe you have FOMO. It could be maybe you're greedy. It could be a lot of things. Only you would know what your weaknesses are. And this is where like honesty comes into play. Just be honest about it so that you actually do gain the benefits of exercising and practicing the trading plan and following to something and following and sticking to a trading plan. Yeah, so it's just it's a practice to build discipline as much as it is a practice that will actually bring you money and profits. So it goes hand in hand. We are aligning our behaviors with the people that we want to be. So with that being said, the people that we want to be for sure have a trading plan. Yeah, bro. So the 10 I want you to like note down these two. Note them down or jot them down. Note them down. Okay. And then the third thing will be in a currency pair. Currency pair. What currency pair are you trading? And you have experience with that currency pair too. Yeah, do you have experience? Have you tried trading it? Have you traded it in the past, or is something that you just have experience trading the pair? Have you back tested the pair? Yeah, so experience with the pair. It's just choose something that you're comfortable with, something that you have been practicing with for a long time. You only need one currency pair to understand and master the most fundamental concepts of the chart. Yeah, so for me, we'll construct the training plan as we go along. For now, we're just gonna deal with the single components that are required in order to make a successful training plan. So currency pair, what currency pair are you trading? And then the other thing, since trading pays people the same way that jobs pay people, it would be fair that you consider trading as a fucking job. So a job has a time where you clock in and it has a time where you clock out. Yeah, so with that mindset, those times will be based on and when you and your trading experience the most volume and the most profits and the most success. So you will go back to your MT4, and you will go back to your losses, eye them down, look at the times, look at the volume, look at how long you waited, look at when the trade was open, and then from all of that reflection of all your past trades and all your past losses, you will look at the things that you will need to change. So let's say I took a trade at 8 a.m. and I probably maybe I felt like I had FOMO and I put like 17 other trades on. That is already over trading. That is already over risking. That is already not following my plan So for that day, if I actually execute on those positions and I open them, then I would have failed my plan. And when you fail your plan, it's basically you demoralizing yourself and beating your self-esteem into a position where you will not get the motivation to keep doing the things that you need to be doing in order to be successful. Yeah, bro. So, moving on from that, you have experience with the pain. Choose something that you're comfortable with, and then risk management. Risk management. Now, there are a couple of different concepts associated with risk management, and people always mention this like it's easy to understand, but it's not easy. Yeah, well, every trade in the chart is a winning trade. Every trade in the chart has a chance to be a winning trade. The only problem that fucks people up is that whenever they place a trade, they come into that trade with the mentality, I want to make a lot of money on this one trade. Yeah, bro. And then forces them to over risk and over leverage and over trade and yeah, bro, they just self-sabotaging behaviors. Yeah, bro. And this is where risk management will come in. Successful people don't need to be managed. They know what they need to do and they get it done. Yeah, bro. So with that being said, you ain't trying to be a loser after all. You're trying to get successful. So if that is the trend of thought, then don't be held accountable for your slip ups, for your own self-inflicted slip ups. Just don't slip up at all. Risk management, risk what you can afford to lose. Risk only your volume should be so low that you can let the trade go the whole day, but not so high that you constantly have to come back to the chart. Yeah, bro. It shouldn't be so high that it raises the volume on your emotions and shuts down your logic. Yeah, bro. Because volume is a crazy thing, guy. It has a chance to make you a lot of money, and it has a chance to also make you lose a lot of money. So you risk only what you intend and are content with losing. If you know that the volume oyifakile inkulu and you about the number one reason or the one telltale sign of umuntu over-riskile or umuntu onyuse volume kakhulu is that they keep checking their phone. They keep checking their phone. Every now and then, 5 minutes later, they're checking their phone because that risk is uncomfortable for them. Yeah, but they are not settled with accepting the trade as, hey man, I have backtested this pair, I know this thing happens at this time and I've seen it happen before, so I'm just gonna have to trust that it will happen again because the success rate of my strategy is this much and I know that most likely than not it will go my way. Yeah, bro. And it's about trusting that most likely than not. Yeah, bro. How do you build that confidence in that trust? Yeah, bro. Of knowing and just letting things run. Yeah, bro. Oh,
Yeah.
you still with me?
Angilalele ntwana angasala.
All right. And then in confidence, it's two things. Yeah. Confidence is experience plus education. Yeah, bro. The
Yeah.
more experience you get, chances are the more education you are feeding yourself, and the more experience and you're executing on that education, you're actually applying that education on the actual chart with actual money. Yeah, bro. In order to gain the valuable and life enriching lessons that stick with you permanently and not just the short term, into fundamental cortex. Yeah, bro.
Yeah.
Yeah, so risk management, so every trade literally has a 50 to 50% that we will win. And the thing is the entry point. Yeah, boy, the person will enter in the middle of a range. Yeah, boy. And then expect to have a tiny stop loss, pass shy a stop loss. That was the point I was trying to show the other day with using the Fibonacci. Yeah. Indicators are good and all, my G, but then they only show price after it has printed. Yeah, bro. The indicator will
Yeah.
wait for candles to print, and then those prices will be fed into the actual program that runs that indicator, and then that indicator will spew out the results of that information input. Yeah, bro. So
Yeah.
by us focusing on the candles and what the candles are doing and what the candles are doing currently, we are essentially one step ahead of the indicator.
Yeah.
Yes. So the indicator is out, no indicators whatsoever. The only reason and the only use for indicators was for when you are in doubt of your trade, you plug in an indicator and it gives you confluence. Right? It gives you a confidence in your trade. Yeah, bro. It
Sure.
shows you, it's supposed to be showing you the same thing that your analysis on a price action has been showing you. It's meant to reinforce if belief yako, if bias yako already. Yeah, but it's not meant
Yeah.
to establish a direction in market or establish no, no, it doesn't do that. Because it's late. It's really late. Yeah, it's really
Sure.
late, dog. I'm a second. The seconds in the market could mean losing and winning. Yeah, bro. Because the candle up
Yeah.
both, dog. Candles can move 50 pips in a minute. Yeah, bro. I've seen ETJ like close of trading day, and it just shot up. Literally, it happened again on Friday. And I told I told people I wouldn't hold trades over the weekend, yeah.
Sure.
But I'm still holding that 0.6 by, yeah, but of GJ. Now it's running at
Yeah.
around 70 pounds or something. But I will keep holding it because what I see ETJ doing now is essentially creeping up for a further drop. Yeah, but
Yeah.
retracement usually for a further decline. So maybe Nina, I will start looking for prices around 0186 for now. I will wait for it to get there. If it doesn't, any taps to any prices close to that will qualify as a tap for me. So I'll execute on that. But for now, I'm just holding price. So risk management, back to risk management.
Sure.
It
Sure.
has
Sure.
two or three moving components, or yeah, it has three moving components. Yeah.
Yeah.
The first one is stop loss. Yeah, well, the stop loss, dog. The importance of the stop loss. Just can't emphasize enough how important stop loss is. And yet, now I find myself sometimes not putting a stop loss, but I'll have it mentally. Yeah, but I'll have it mentally with
Sure.
okay, if I open the chart when I'm supposed to check in and over a progress of my trade, and I find that it can get like printed and closed at this price, I will know now it's over and I will close those trades. But you always need to have a stop loss in mind. Like the worst case scenario, when you yeah,
Yeah.
yeah, so stop loss sakho mase siba just nje below leyo worst case scenario zone yakho, where aka the lowest point of the zone or the lowest wick sticking out of the zone or above the zone or the low or whatever, but it must be as low as possible that you are still within your risk to reward ratio, but also low in such a way that it gives a price room to breathe. Because sometimes price just wants to fuck with you, man. Yeah, but
Yeah.
sometimes dog, sometimes isikhathi sakho sizokushaya and then ungene ngesikhathi esirong, kanti imakethe vele isikulindele ukuthi uzo-expect ukuyenze le nto le and then ikushaye. Yeah. But those times are normal, it happens, bro. Because manje mawucabangisisa kahle hle, there is no way that the brokers that actually give us this access to the market don't know how we trade. They know exactly how we trade. I mean. So
Sure.
sometimes it is reasonable for them to try and pull a first one on us. Yeah, bro. Those
Yeah.
times when I'm on a stop loss circle, if stop loss circle gets slipped, then obviously that's a big boo boo. Yeah, but also meant to like big enough. And you can actually report them and get your money refunded. You can actually they can refund that trade that they have slipped the stop loss circle as long as you have evidence and proof, aka ama trade IDs. Yeah, but ID
Yeah.
numbers. Yeah. But things like that do happen. And that is why my stop losses are so important. Just in terms of ukwazi, if your analysis is on point and your setup is right and your timing is on point and your volume is also reasonable, you trade that is right. Yeah.
Sure.
And the footy by you ticking off these boxes, yeah, I mean okay. The risk management, it is the first box that I take. Before I even take the trade, I need to know which stop loss I'm scooping. I need to know who take profit I'm making. Before the trade even happens, I must have those things in mind. Excuse me. I must have those things in mind. Yeah. So from a stop loss, the take profit is the other moving piece. Now, a take profit, sometimes people base they take profit on greed and not logical market prices. Umuntu place profit 10 100 pips. No man, except you only need 10 pips per day. Right? Now, my was a predictor or 10 pips per day successfully, consistently. That is all you need to make money, and you'll only focus on that 10 pips per day. You will shut out the noise, and you'll only focus on what gaining 10 pips per day. Gaining 10 pips per day. That 10 pips per day times how many days now? 100 days left in the year. Or 100 left in the year. Those 10 pips, considering which risk to reward ratio as your account increases also changes, is a lot of money, my guy. You don't need a lot of market movements to make money. You just need to predict and have a showcase prediction and experience-based move that you know happened at a specific time on a specific currency pair, and then you maximize any profitability from that one move. You don't focus on a lot of things, but you focus on the few, not the main. But you stick to one move. That's why you remember when you first started this journey, dog. I want people to tell you, hey, this guy's been doing the same thing for 10 years. This guy has been doing the same thing for 10 years or 30 years, or he's been trading the same strategy or the same setup. It is exactly what they are talking about. They mean exactly that. These guys focus on one. If you follow trade doji, bega uthi amadoji aphinda ngasikhathini. Backtest ukuthi idoji masiphintile which check markers or like amalentuza, benchmarks does the doji need to have in order for you to qualify as a successful doji, and so for you to actually take the trade. They only stick on one thing, dog. And mina into engibambile about this whole thing le ngiyenza ngo-9, dog. I trade engulfing patterns, bro. That is all it is. Engulfing patterns. I know that sooner or later, when price is oversold or overvalued, there will be a candle that will tap once to that price again and then drop and engulf the previous candle. And that for me is my signal to act. That for me is my signal to act. The candle that prints after after the doji or the final candle or the highest point of the candle or the lowest candle, the one that prints after that will definitely engulf. As long as it's zone yako, trend lines akho, and all of the other factors that we're still going to consider are on point and accurate. So take profits. Take profits, but just be reasonable. Always try to make the best decision that you can. You know that the price sometimes won't go there. So when I bought, see, take profit I try to reduce at least 5 pips from that, at least below. You might not 5 pips, just to give a margin for error. Just what if it doesn't actually go all the way, but it comes somewhere close? I want my trade to lock in profits when it comes somewhere close. I don't need it to go all the way, because my move is complete if it hits my take profit. Also, you don't need to actually set the profits on the chart. You can just have a mental take profit too, my guy. The thing about having mental stop losses and mental take profit is that you need to be risking as little as humanly possible, so that you can afford to let things go, and let things run. To let the market show you what it wants to show you.
Sometimes it's complicated, this whole thing.
And the rule, dog, yes. But ayikho complicated ngani thing, dog. Ayikho into it's the mindset, bruh. Yabo mfethu yazi ukuthi into enye into futhi. Yabo impilo lethu yonke, dog. Impilo lethu yonke we always seeking approval angithi. So masenza into, chances are khona umuntu osomtshela Yeah, bongayo. And we only
Yeah.
do that because we want to yeah, when they right, yeah, we want them to approve of what we are doing. Yeah, and we want they make people feel like they nababa abantu or something like that. But ekugcineni, that is destructive. Because manje, when you base your own feelings and well-being on an opinion of another person, you've already fucked up. Yeah. So
Too
risk
much stuff.
management in
Because
effect,
we usually want financial peace, right?
yeah, as long as risk right, I know that my trade will play out the whole way. Are you waiting to say I get stopped out just because I over risk and my trade still goes my way? Yeah, but
Yeah.
yeah, so with that considered, the last piece of illegal risk management is just do it, my guy. You know, you can only and manage a risk to a certain extent. But if you won't do anything, there won't be any risk to manage. Yeah, bro.
Yeah.
And by me saying just do it, I don't mean be a fool and be ignorant and just bumble into it. No, you always calculate something. You have your stop loss in mind. You have your take profit in mind, and then just do it and let it go. Stick to the painful rules and trading plan notes that you have stuck out for yourself. Stick to them. Just for once, do the most that you can do. Do everything that you can do just to stick to this plan.
Yeah.
Because it discipline, dog. It is discipline this thing, man. And if it's disciplining a full market, the markets are a discipline thing when they own. They don't break rules. They have set rules that they don't break. Yeah, well, they have
Hey.
set like concretely set guidelines that dictate and guide how price trends and guide how everything happens and why it happens the way it happens. Yeah, bro.
Yeah.
So that all of these things that we discuss now, we will discuss into detail as we break down into a simulation. Yeah?
I'm
But
not stressed. Man.
the top five or the fifth one is the fifth one is trading planning, currency pair, okay, risk management, yeah? And something here. We like we should add in things,
Now I've got them down, Don.
oh yeah, all right, so that next thing top five, okay, it's SL, TP, confidence. So just do it. Okay, five figure dog. Five is not just one thing, but it has a lot of subcategories, man. But it all starts with patience.
Yeah.
I this word. People throw it around like it's so easy to have, man. I mean, just have patience. Just have. Do you even know what patience is? Yeah, well, dog. So, and have patience in this. Have patience, bruh. Patience. You can only have patience in something that you know will work out in your favor. Yeah, bro.
Yeah.
Because you are very impatient if you don't know how something is going to turn out. Yeah, bro. And you get fidgety. Because you are not confident in how and in the work you have put into yourself, and you're not confident in your skill set. You don't trust that you are actually able and capable of seeing, spotting, and executing on a right trade, on a profitable trade. Yeah, bro. So
Oh,
patience is is not only like letting things run and letting the trades, like having the patience to just chill back and know that okay, most likely than not, I have seen this move before, and 90% of the time it turns out my way. Yeah, bro. That patience is one aspect to or one yeah it's one component to number five in the trading plan. Yeah, bro. The other thing
Yeah.
about having patience is take the time and have patience in marking out your charts, in analyzing your charts. Yeah, boy.
Yeah.
Take your time. Uthatha Sunday from Excel. Take 6 currency pairs. About a trading view, dog. You have an
Yeah.
app, a trading view. If you use it on your computer or if you use it on your phone, you can actually go to the daily time frame and then replay the weeks or the monthly candles as they form and like candle by candle. And then move on with how simple this thing is. If you see it on the monthly frame, on the monthly time frame, cabanga ukuthi uzokwenza malini masubona ku-short time frame. Yabo. So you only get to see those similarities by if you only take enough time and you take the sufficient time to actually label out your chart. Yeah, boy. Labeling.
Yeah.
And by labeling, I'm talking about knowing which weights are where and which weights are the most important or the strongest. Yeah, boy. Knowing the higher time frame, what your bias on the higher time frame. Are we going up? Is it a directional bias or are you counter trend trading? Are you following the trend? Are you looking for a break and retest? Are you looking for a fake out? Are you looking for an engulfing candle? Are you looking for rejection from resistance or bounce from support? What are you looking for? The only way you know is by taking the time to label out your chart. Yeah, bro.
True.
Now, the things we use to label out our charts, we have trend lines, yeah,
Away.
on the higher time frame and lower time frame. And then we have support and resistance, aka supply and demand. It's the same thing to me, but
Yeah.
yeah, it's the same thing. It's just support and resistance zones. Yeah, bro. Mina ngiba
Yeah.
njengesilili nge-foundation. Ibhola malibhansa from the-foundation liyanyuka. Mawuliphosa lishaya kwisibili liyehla. So, yabo, you sell resistance, you buy support. Into abashayayo abantu nge-support ne-resistance ukuthi they can't finesse the minor zone breaks, yabo. Abakwazi ukubona lawa amancane ama-zone breaks, ama-break ne-retest, yabo. Abafana abashayo umuntu atshena ukuthi we are still retesting i-resistance kanti now we have broken above that resistance, now we're closing up, yabo, because the candles have printed newer recent weeks, yabo, and they've created a more recent zone than the one that people are focusing on. So that is why I say focus on the most recent zone when you look to the left. As the candles are printing, you focus on the most recent zone when you look left. Yeah, boy. And that prices alone will exponentially just increase the result you see with applying support and resistance trading and ideas. Yeah, boy.
Yeah. No.
And then it's also after my trend lines, you can trend lines have support and resistance. You have higher time frame and lower time frame, and then I'm out widths. The widths that you see on the higher time frame are ranges on the lower time frame. Yeah.
Yeah.
Yeah. So when you see Ikandela 4 hours, let me load the simulation. So actually want to go into detail now because this chili thing is making me feel like I'm missing out a key part of this whole process of educating and getting educated at the same time. So we'll start a simulation here, my guy. Let's start with 5 friends. I like 5 friends. Start with 5 friends and then we leverage it 1 is to 5, 100 scores, leverage IC market, the commission per lot by type of commission. And then here's one chart, date that I want to look at this 107, okay. Let's see. Let's start in 2019. That's in 2019 June. Yeah, because of June, Sibwana, man. So let's just start maybe before the month end like June. You see how things were back then, yeah, bro. And to see how things are actually how the markets were behaving. Not June last year. Okay, let's do some charts here now. See. Also, so we have 4 hours of week, we have 15 minutes, we have only the hour. Hour and so 8 minutes, we can have hour two. So our time frame that almost completes is daily missing. And I would also like to see the monthly, just to see how the monthly also goes and things moving in the middle of the year. So analysis here too, how I start the analysis, or how we are supposed, every successful trader starts the analysis. You take your highest time frame that you can use, yeah, and you take the highest time frame that you are willing to use or willing to wait, or like stick it out for the trade. Now, once you trade weekly, you have to wait a day for it to close. Once you trade the hour, wait for an hour to close before you close any trade, or you open any new trade. Mawuthatha time frame ya 3 minutes, ubona ngathi nayo i-range la 3 minutes is the thing. Then you wait 30 minutes, you wait 30 minutes until 30 minutes closes. And that is why time frames are important, is knowing where we are in terms of the time frame and current price. So let's look at, I like to start from a daily, but the monthly since it's here, you can look at that for now too, just to have the overall directional bias of the higher time frame. So let's go ahead. All right. Yeah. So it goes. Okay. Okay. So 139 though, Charlie, you still there?
I on Ponyahuza boy.
All right. Basically, we are looking at the weekly. The weekly is still buying very slow, but then just increase the speed. I think I'm gonna kind of so we can have a full screen at least. So we go down, we go down, we go down, and eventually we come into a very interesting area. That's called, okay. What the hell? No, that. Okay. Lana actually, let's look at this on the smaller time frame. Yeah, look at that movement on the smaller time frame. Just basically, we will be understanding exactly how we got to that price and how we plan to be moving or how we execute moving forward from that price. So, okay, what time is it first? Let's look at the chart sessions. Okay, there's not a trading time. Let's speed it up a bit. And then we are approaching our trade. Okay, another concept that I want to just stretch on again is that if, like we said, trading is meant to be treated like a job. So every job has your specific clock in time. Now, if you are excellent at your job and you love your job and you are excited about your job, it makes sense that you would show up earlier. Yeah, boy. So showing up earlier than 8:50, showing up earlier than your set trading time or your most volatile or most volume momentum filled time, showing up earlier will give you one, better entries, two, you will have the advantage, yeah, bro, of actually following the price and seeing how they react to the specific key levels, yeah, bro, to the specific key levels. So, if with that being said, we are going to go into iskatse, which is, let's take 6. If it's cut to 8:50 now, if our time is
Sure.
8:50 in the morning, let's say I want to show up 2 hours early for work just to get emails done and out the way and have everybody else's things sorted. Yeah, I'll show up two
Yeah.
hours early. So that means when I'm 7:50, I already am looking at the chart. Yeah, I have a
Yeah.
rough understanding of what I will see and anticipate for the day. Yeah, bro. Just session. All right. So we're back here to hour, and already we can see a couple of things. We can spot out a couple of very interesting things happening here. Just based off this hourly, I am able to tell you what I think this is what is possibly happening here. Okay, this is what is possibly happening here. Yeah, well, the most recent zone being this, yeah, and us having tapped into that zone, into this zone. And now, if this candle, and this is for our time frame now, if one candle has already rejected, and mind you that it created it. Okay, let me change the template color here background because I see the color is messing up to the width. I cannot see it. Let's see background black. Let's make it yellow. No, it was green. Yo, something like next. Okay, maybe we'll take a paler color than green. Let's use this. Okay, okay, so fine. No grid, no grid. Okay. Now a few things we can spot from here. And notice where the prices are. Yeah, well, notice where the prices are. Oh, 129. right now,
Ntwana.
right now, this is what I talk about when I say put in the work, put in the required work, and do as much as you can to secure your chances of succeeding. So now, if the end of the year like June and close to last year, last year was September, a price ye 129, 165. Now, if
Yeah.
ibhizinisi and the whole world economy moves in years and yearly rates of interest and yearly what and yearly things, if that is the case, then best believe ukuthi we from this price esiyona manje currently, we will need to be at a price that is close to the price that we were back last year. Yeah, but so August, all of this is August, okay. If kuthiwa ngoJune 27, buku price ekuphi? This is very ironic, sir. But anyway, if we spot from 17 June, let's start from the beginning of June, so just to see exactly. Okay, 28 May. Now, the prices are 136, yeah. And we see now that what basically happened is that we dropped from 137.50 from June, the 31st of May, when the new monthly candle opened. When this monthly candle opened, we basically we closed at 136.780. That was the price of ETJ the 1st of June last year. 136.780. So Monday, the price would have depreciated 136.87 minus the current price of TJ, which is, let me check for you here on MT4. ETJ money is around 133.480. Yeah, boy. And then the difference you get from that will be a small percentage, yeah, will be a very small percentage of a variation of exactly how the prices have changed from that year till now. Yeah, boy.
Sure.
So isn't there ganjalo are things that people don't pay attention to? But again, okay, so man, we're actually at 133.052. Okay. Now to see how much when just the economy of Great Britain versus the economy of the Japanese. Now we see that the yen has gained strength ever since last year. Yeah, because if the price of £1 was 136 yen last year in the 1st of June, and this year it is 133, that is more than a 3 base point price change, my guy. There is a lot of pips. Yeah, bro. There's a lot of pips going downwards. Yeah, bro. From 136 to 133. How many pips on the chart is that? Right? It's over 1,000 pips. Yeah, bro.
Imali leyo.
Engakanani. So 136,810 minus 133.052. We get to 3.7558. So basically we'll change around 3%. We've had a decrease at 3% going downwards for any AGJ. And this year has not ended. Yeah, but now normally for our currencies and economies, we cannot have changes of 3% just like that in a year. Yeah, but we cannot. So what will happen is the prices and the economy will try to create scenarios and events that further boost the prices up to at least retrace a bit from O minus 3% to at least minus 2.5, which is what I anticipate is going to happen. From 133, we need to come to at least 134.7 something, yeah, for us to have a 2% decrease. And then we'll say the Brits are on the back foot, because on the year by year scale of things, last year we were at a different higher price than the price that we are currently. So what that means for me is that I know with the yen, the Japanese guys are doing far better things than the Brits. The Brits are suffering from corona. They don't know what the hell they're doing. Their gold stocks and all of that crap and oil in the Middle East crashing. That is mainly why the price changes. Yeah. You consider big economical events that really affects employment, that really affects interest rates, and really affects daily lives of average people in that country. Yeah, because after all, economies are countries. Like we talk about countries here. Currencies,
Yeah.
we are literally betting against countries, and we are betting against economies, world economies, when we are here on the charts. Yeah, but that math alone is already an exponential curve increasing into the favor of being profitable. Yeah, just doing your research first, your back testing. Yeah, but to get a feel of how things, the market can never have two drastic changes, because they will have catastrophic effect on the other economies on the other side of this graph. Yeah, but that would mean I'm a disaster, I'm a recession if things were really like crashing, and if I'm a percentage, like the price changes per year on year changes like by 7%. Then was about to tell no, if Britain showcasing is going down the toilet together, something big is gonna happen, or something big has already happened, which is propagating this downward decline. Yeah, so consider that this thing, we are dealing with world countries. Yeah, we are not just here looking at candlesticks. No, we are dealing with countries, and people's lives are at stake. Yeah, so whatever happens, they also consider other people's lives. Yeah,
Yeah.
yeah. So from Leo understanding it, we will go back to the price action of things. Yeah. So now we already have one important factor. We already are down -3%. Yeah. Now, historically, what I've seen is that usually, even like about if you watch the day on day, like the start of the trading day and the close of the trading day, and you watch the percentage changes, Google and Google trading view, where when you have your watch list, yeah, you will see that the percentages, they rarely go above 3% per day. They rarely